All right.
Welcome, everybody. My name's Herbert, and this is the Tesla Minute. So every day at 12 noon, we do a 15-minute update. Today, we have Nicholas Gibbs joining us. So he is uh, runs his host a YouTube channel called Investing Against the Grain. He's an amazing. You got to check out one of his videos that I just saw recently. That he reviews what happened in 2022 and he gives predictions for what happens in 2023, including what he thinks is going to happen with the stock. And Nicholas, you were pretty out there. There are some things that you were making predictions on that I really enjoyed. So thank you for joining me today.
Yeah. No, thanks for having me. It's a pleasure to be on here with you.
So the big topics we're going to cover today is we have seen there's bulls and now there's these ex bulls, and there's this kind of, it's an interesting dynamic of what's happening with the ex bulls where they've, because the stock has fallen, they're making their changing their sentiment, they're changing their fundamentals. Maybe they're not, in their minds they're not. So I'd like to cover bulls versus ex bulls versus the bears. What are they saying and what's happening recently? And then the other thing is, what do we think is going to happen in 2023 in terms of volume versus demand versus margin? What's going to happen? So thank you very much. Let's get started with that, Nicholas. So as we always do, we cover the latest tweets that have happened, the latest kind of announcements in the last day or two. And so this is the topic of the day. So this is one example. There were so many of them, but Jason had a tweet says, to all the Tesla bulls who have recently become bears, stop trying to convince yourself and everyone else that the fundamentals have changed. They have not changed. That's Jason's opinion. The stock price has changed. Please spare us all and refrain from panic vomiting all over Tesla Twitter. What's your reaction on this so far?
Yeah. So first of all, Jason's one of the goats that I think a lot of people got into Tesla trying to emulate the results he has seen, and so that obviously hasn't panned out for a lot of people as of late. And so I think a lot of people are jaded, but he brings up a very valid point, I think, and that's that a lot of people have gone all in, maybe too all in with margin and options, and maybe now they're all out. And now that they're all out, you're starting to hear a lot of naysayers about everything with the company. So, I mean, you can understand the emotion of it, right? And everyone
Mm.
says keep emotions out of the stock market. Well, easier said than done. I think this last year has proven that, especially for us Tesla investors. But the one thing I would push back against on Jason on this,
Mhm.
where and I'm a big fan of his, but I agree with everything he said, except for the fact that the fundamentals haven't changed.
Okay.
And I think you can't say that the fundamentals haven't changed because even Elon is saying the fundamentals have changed. And while I'm always, I mean, you can ask Alexandra, she thinks I'm just always optimistic about everything. During the semi day, I was thinking maybe they roll out a roadster out of it, and I really believe that could happen. So I'm always very optimistic, but at the same time, we have to listen to Elon when he speaks. If we believe Elon about FSD and the future and everything, we need to also listen to him when he's talking about we're going to be in a big recession. We might have to drop margins down to nothing so that we can just put out more vehicles. And that's the same person saying this. So if you believe him on one, you have to believe him in the other. And if we're talking about margins going down, vehicle sales going down, and this tumultuous period we're going to go into, to me, that means the fundamentals have changed somewhat. And even if Elon's wrong about the big recession, he's not wrong about what he sees within Tesla. And I think that's what's forming a lot of his perspective as far as what's going to happen over the next few months. So I don't know, maybe you don't consider that fundamentals, but I think we're going to start seeing some weakness in Tesla compared to the Tesla that we've known. But it's not just Tesla, it's every company out there. And I think sometimes we get too tunnel vision thinking this is a Tesla problem and we don't realize it's a market problem, it's a macro problem, it's a world problem. So
Okay,
that's,
Nicholas, though, tell me
yeah.
why so the stock fell from a valuation of 800 billion, $1 trillion now to like 300 billion, uh, you know, and it's even worse, right? It's even falling further. The ex bulls are saying, oh no, it's going to fall even more from what it's currently valued today. And a lot of people are now refactoring, re-rating this PE ratio, saying, yep, it is just a car company. That's the difference, though, versus yes, we need to prepare for a recession next year versus oh no, actually we're not anything special. Doesn't matter the cash flow is coming. We are just like a regular car company. And in fact, I see sales falling or demand is crippling. So what's your response to that?
So I believe both those statements can be right at the same time. I do think we're going to fall more personally. I also believe Tesla will be the most valuable company in the world. And just because Tesla falls more, I don't see that as meaning it's being re-rated as a car company. I think that means Ford, GM, all of them are going to fall even harder. All right. So even if Tesla were to fall 50% from where it is right now, it would still be a $150 billion company. That doesn't happen without all the other autos also cutting their 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 market cap, right? So I don't think it's just a Tesla narrative. I don't know where Tesla's going to go. None of us do. But look at today. Why is it down today? That's because the ADP private jobs report came out and it was really good, which is really bad for all of us
Yeah.
investors. Tomorrow's the big one. If that one's hot, what do you think the stock market's going to look like tomorrow? It's going to be even worse. And although technically, if you believe in charts and stuff, it looks like maybe we double bottomed. Tomorrow could change all of that. And if we break through 100, again, if you're into charts and volume and all that, it can go all the way down to 60 is what it looks like. Again, I don't believe in any of that personally, but I think you'd be blind to not at least look at and be aware of it. So there's definitely validity in a lot of this, but I think all the pain kind of ends after Q1. I mean, I think that's a big part of what March 1st is all about is reminding people who Tesla is, their prowess when it comes to engineering, and really getting people excited about everything and leading up into the investor meeting, right? They want people happy and excited before they have to vote on all these new proxies.
Okay. Well, so I appreciate your opinion. I just think that personally, that people who follow the stock price and then make decisions based on where they think the stock's going to go up or down in the next month or so, I think that's the wrong way to do it, right? I think that
I
you need
agree.
to basically look at the fundamentals. And at this point, I don't see any change. I do prepare for a recession. I think that the stock may fall, sure, but at the end of the day, I think it's completely undervalued at this point. So let me kind of interestingly, what's happening now is we've got the bulls, and some of us are still very much bulls, and it depends on what your definition of short term and long term. Me, it's like over a year, right? So short term, there's going to be pain, but a year from now, things can be much better. Now, but look at these. So the X bulls have flipped, and now they're all going, "Oh my God, the stock's going to keep falling, and this is like a broken story. Or demand is crashing. All that it's not going to work out. Competition's coming." They're now saying that. But here, look at this. This is Drew Dixon, the founder of Albert Bridge Capital. He's been a Tesla bear, and he's written an article just today, and he's basically saying, yeah, 2022 was a disaster, but let's take a look at the fundamentals. And if you read his article, he's actually quite level-headed. He's not a bear, and we're starting to see many bears basically changing their tune. Yesterday, I did one of these episodes with Alexandra, and she showed that ARK Invest and others are now investing again, are now buying like crazy. So Kathy Woods talks about here that EV maintenance and Hertz are saying that it's 50% lower and that Uber drivers are starting to buy it. And what she's just basically saying here is that EVs are basically rising faster and destroying oil. But this is the part of her thread that I was interested in. She said that innovation solves problems and actually gains traction during the tough times. So last year, auto sales dropped 8%, but EV sales soared. And so that's why, during tough times. And then before I end here quickly, that there was this article that came out that said that during the Great Recession of 2008, the vehicle sales fell 40%. So we have a high US vehicle sales of 17 million, can fall down to 10 to 12 million. But it was actually the gas guzzlers that hit the worst, and hybrids was able to make a break. And so do you think that EVs are going to fall next year? Or isn't it going to be, yes, the demand might fall, but EVs will kind of, along with the IRA and discounts, do you actually predict that EVs will actually fall? Tesla's revenue sales numbers for next year?
Yeah. So no, I think Tesla will do 50% year over year in 2023. I I think I
Well,
think
okay.
we would have essentially hit that if we didn't have this issue with the Shanghai lockdown. And honestly, if the IRA and all that didn't happen, I think we also would have probably gotten closer, but people delayed deliveries. And I think it's fair to say, like, everything that I said that sounds negative for anyone who thinks
Yeah.
I'm this bear now. I'm talking about the short term. And when I say short term, contrary to
Yeah.
you, I see short
Yeah.
term as in 1 to 2 years. I'm a long-term investor, so I look out at least a decade. I mean, Warren Buffett's famous for saying, anything less than 5 years, you're short term. So take it all with a grain of salt. What I'm talking about is the immediate headwinds. And to your point, no, I don't think EV sales will fall off. Um, Tesla may have to do some things to pull some levers to get more vehicles sold. If anything, margins might fall off, not vehicle sales. Vehicle sales won't. And in the big scheme of things, it doesn't really matter for Tesla because, okay, so what if they take a 2, maybe even 3% margin hit if it means they have that much more revenue, which means they put that much more money into the piggy bank. And that's during the rough time. Like, think about that. That's during the
Yeah.
hard time. In the last 2022, we had how many Black Swan events and Tesla still grew 40%. Like, just think about that. Like, this is our 2008, if you will, all over again. Or maybe we haven't even gotten to it yet, but this is almost even worse because of all of the other externalities, including COVID, including Russia, Ukraine, it's on and on. And they still did 40%, even with, call it, a month and a half of a lockdown at Shanghai. Like, that's unfathomable. All right. What did GM do that they just got praised for? They grew 2%
Yeah.
over last year. Like, that's what we're talking about here. And so Tesla also benefits that they're starting off from a smaller base. Now, mind you, they're getting bigger now. So it's not that small of a base. But to go from 1.3 to about 2 million, I think that should definitely be feasible for them.
Okay, can you explain to me a little bit more what you're saying? Because you're saying that next year you still think that Tesla might even hit 50% of sales, but regardless of that, you think that stocks can continue to fall next year. What's
I
the reason?
so so this year now, right? So
This year.
yes. So look, a- again, it all depends on perspective, right? The way I look at it is tomorrow we might have some really good jobs report numbers, which means we sell off. And then next week we get CPI information. What if CPI isn't coming down? And then we get the Fed that comes down. What if the Fed says, okay, cool, but we have not seen uh, job or salary inflation slow down? And that is a big problem for them because if they take care of all of other inflation, but they don't take care of that, then inflation may come right back. Right. And so they need to hammer that off. They need to make sure that people get laid off, that unemployment goes up. As sad as that is, that's what they need to do. And you're seeing the tech sector, but you don't see it anywhere else. And so that means the Fed may have to go further than what is needed, which sends us into a
Mhm.
recession, and it's inevitable. It's this, and so that might be another 2, 3 months of downward pressure. But back half of the year, I think we will, in my opinion, be higher at the end of the year than we are at the beginning of the year. But I think it'd be silly to not understand and expect the risk that we see in the next, call it 3 to 6 months. It's there. Elon's telling you it's there. Elon sees something we don't see, and he's speaking from what he's seeing. So if you trust him on that, you or if you trust him on FSD and everything else, you should trust him on that. And he's been right on the macro. Exactly. He said when we'd have a recession, it was a technical recession, but he called it. He said when we would start to see inflation fall off a cliff, and it happened. And now he's saying this. I mean, like, the guy should be the Fed chair.
Yeah, no, exactly. I'm just trying to eke out the difference between a bull and the ex bulls and
Yeah.
whether or not it's all about our timing, right? Like, I don't really personally, because of my situation and where I'm at, I'm not worried about the stock falling from where it is today temporarily for the next
Mhm.
3 to 6 months. It's just more about when people say, no, the valuation is actually correct, that this is the actual correct valuation now at this price. And oh, by the way, it's actually going to fall more because it really shouldn't be the valuation right now. That's what gets me. I'm perfectly okay with saying, hey, this company should have a PE ratio of 30 to 50 because that's what it deserves. But the stock is low right now because of macro and others, but that's not the accurate representation of value today. The stock could fall because of these events that occurred, like you walked through. It's what pisses me off is when people say, no, this is actually fair. And that's like, God, you're like your opinions change because of the stock price. You shouldn't be.
Yeah. Well, the way I look at it is when it's a fair value, you're you don't want to be putting money into it. Right now, I agree with you. It's not a fair value, right? It's extremely undervalued. And so this is why I keep buying. I mean, I'm actually not buying right now in the anticipation that we can buy more. I bought all the way down, and I think I had about $200. So I finally decided, all right, I'm just gonna wait a little bit instead of just dumping money straight into it. And I'm happy I did because now I'm picking up at lower prices. And so that was more so just me being greedy and wanting more shares per dollar that I have. But no, I think you're spot on. I don't think right now is an accurate reflection of the company, the value
Yeah.
of it. The
All right.
stock is completely mispriced compared to the company, and this is where wealth is created right here. The delta between that, the delta between the people who see
Yeah.
it and understand where the company's going, what the company is, and what the market says, and someone's wrong, but that's where wealth is created.
Okay, I love it. I love it. So that's what I needed you to hear is that the valuation is not, because the difference between us and bears is bears think the valuation is overvalued, and that's where we can say that I think that the next year the stock's going to fall. That's not, but not because of that. It's a disconnect. Okay, so
Yeah.
we have just a few minutes here to cover somewhere just the quick top things that happened today. So one good news is that the street actually had an article today talking about the fact that the Tesla fans are pressuring the government and writing comments about changing the Inflation Reduction Act to be not so unfair to Tesla, or so forth. And they actually this is the article itself, and it was really cool because they actually showcase Farzad, and he deserves it because he was the one that wrote that petition, and then Elon said messed up, that there's this weird, clearly it was politically driven. And the good news is that it's actually now kind of being highlighted and more articles written about it, the better. And we have 40,000 signatures. And so if folks haven't signed this petition yet, please do that. And I think that that's fantastic. And then, so that's basically the key things that happen. Any thoughts on this petition and the IRA itself?
Yeah, I think I love that Farzad did this. Reading through it, you can almost feel his passion coming through it, which I love. I almost like pretended that there are expletives in a few places, and it's like I could really feel it. But no, I'm happy Farzad did that. It's definitely something that needs to be brought to the awareness of everybody so that we can get things changed. I'm in the ball camp that this wasn't something nefarious. I don't think this was. I
Okay.
think they just used some. So because if it was and it was all about unions and all these things, then the Mach-E would qualify. I think they just used some outdated generic verbiage of what an SUV is, and that led to all of this. But nevertheless, it's a mistake. It's an oversight, and if we don't bring attention to it, no one's going to fix it. So, this is what the Tesla community is best at: is rallying together. Showing that a bundle of sticks is stronger than one on its own, and Tesla community has made change. Whether it's Alexandra with the S&P 500 upgrade, or what Farzad's doing now, it makes a difference, makes an impact. So make sure you go and sign it.
Good. Thank you, Nicholas. Please join me again next time. But so thank you. Follow Nicholas Gibbs. He is you can YouTube at Investing Against the Grain, and you can see he's got his own opinions. Thanks, guys. See you later.
Cheers.